So, when you think of the world's big investment hotspots, where does your mind go? Silicon Valley, maybe Shanghai? Well, today, we're going to build a professional investor's playbook for a place that's climbing that list and fast, Bangladesh. We're going way beyond the headlines to break down exactly how the pros decide if this is the next real opportunity. And listen, this isn't just hype. This quote gets right to the heart of it. We're talking about a high-conviction destination. Now, that's just investor speak for a place where serious strategic money is flowing in. And it's flowing in for one of two big reasons. Either its manufacturing muscle or its massive domestic growth potential. But here's the thing, right? It's so easy to just hear low wages and think, okay, that's the whole story. But it's not. Not even close. For the professional investors, the ones who consistently win, the analysis goes so much deeper. So how do they really make the call? Well, that's the very playbook we're opening up in this explainer. Okay, so where do we even start? Every single solid investment needs a core thesis, a really clear and powerful why. For a place like Bangladesh, the pros anchor their entire strategy on one of three fundamental growth engines. This is the absolute foundation of the playbook. And here they are. First up, the cost advantage. This is all about leveraging lower operational costs to really boost your margins. Second, you've got volume growth. This means capturing a piece of that massive, and I mean massive, domestic market of over 170 million people. And third, there's supply chain diversification, which is basically using Bangladesh as a key part of a global Asia Plus One strategy. The rule is pretty simple. If your business model doesn't tap into at least one of these, the pros would probably tell you you're looking in the wrong place. And this brings us to a really critical distinction. You see, amateurs, they talk about wages. Professionals, they are absolutely obsessed with something called total landed cost, or TLC. As you can see here, it's the all-in price. It's not just what it costs to make something, it's everything: logistics, capital, compliance, even friction from currency exchange. This is the real number that tells you if a cost advantage is actually genuine. All right, so we've got our thesis. But now comes maybe the most important part of the entire playbook, the reality check. It's time to look past those shiny headline numbers and really stress test the hype. We need to figure out how those big macroeconomic figures actually translate into business performance on the ground. This slide just gets to the absolute core of the issue for any investor. A headline shouting about high GDP growth looks fantastic on paper, right? But for an operator, it means absolutely nothing if you can't turn that into real cash flow and then get that cash back home. The headline is the what, the on-the-ground reality is the how. So how do you map that reality? Well, you investigate these key channels. You ask the hard questions. Are your target customers actually earning more money? Is the power reliable in the exact industrial zone you're looking at? And that last one is critical. Can you actually get your foreign currency out in a reasonable time frame? Answering these questions is what separates a successful investment from a very expensive mistake. Okay, now the playbook gets really hands-on. We've stress-tested the big picture, so it's time for the deep dive diligence. This is all about gathering real, actionable, on-the-ground intelligence before a single dollar of capital ever gets committed. Now here's a powerful mindset shift straight from the pros. You don't invest in a country, you invest in a corridor. See, your location isn't about finding cheap rent. It's about strategically lowering your total landed cost. Are you setting up near Dhaka to get access to talent, or are you closer to the port at Chatlogram for exports? That's a critical tactical decision you have to make. And here's another crucial concept from the professional's toolkit, the capability wedge. See, Bangladesh has this massive, scalable workforce. That's a huge plus. But your success really depends on managing the gap between all those operators and the high-quality middle managers and engineers you need to lead them. The best companies, they actively manage this wedge. They build their own training factories and bring in a core leadership team right from the start. You know, professionals don't just guess about risk, they manage it. And that means having a formal risk register. For Bangladesh, these 5 items are pretty much always at the top. First, foreign exchange and repatriation. Can you get your money out in a timely way? Second is regulatory execution. Are your goods going to get stuck in customs? Third, ESG and reputational compliance, which is just non-negotiable for global brands. Fourth is simple operational reliability. Will the lights stay on? And finally, if you have a local joint venture, is your partner someone you can absolutely 100% trust? These have to be actively managed from day one.
So we've done the diligence, we've mapped out the risks. Now we come to the ultimate strategic question. When do you actually choose Bangladesh over other regional powerhouses like Vietnam or India? This is all about finding the right strategic fit.
This decision matrix really makes it crystal clear. Look, it's not about which country is best. It's about finding the right fit for your specific business. Bangladesh wins when you're talking large-scale assembly, where unit economics are absolutely king. Vietnam excels in more complex, high-precision manufacturing. And India, it's the undisputed leader for deep engineering talent and tapping into its own vast domestic market. It really all boils down to this. This quote perfectly captures the strategic decision. You choose Bangladesh when your whole business model is built on competitive unit costs and massive scale. And, this is the critical part, when you have a solid plan to engineer your own reliability through smart site selection and tight operational controls.
And this brings us to the climax of the playbook. We've done the analysis, we understand the strategic fit. Now it is time for the final moment of truth, the go/no-go decision. This is the explicit, non-negotiable template the pros use to make that final call. And here it is, the final 5-point checklist. You need a clear, confident yes to every single one of these. Number 1, is our total landed cost advantage big enough to justify the risks? 2, can you guarantee reliability for your customers no matter what happens? 3, are the utilities acceptable even when you factor in backup costs? 4, is your compliance system fully funded and ready for a worst-case scenario audit tomorrow? And finally, number 5, is your plan to get your earnings out of the country feasible even under pressure? If there's a no anywhere on this list, the pros don't proceed. It's really that simple. So the playbook is clear. The opportunity in Bangladesh is absolutely real, but it is not a passive investment. Success there isn't just found, it's meticulously built. It all comes down to execution. And that leaves us with a final question, which isn't really about the country, but about the investor. For those who can truly master that execution, could this be the next great growth story? Well, the playbook is how you find your answer.